Hello, Dr. Stock viewers. Welcoming you all to my new video. In this video, we're going to discuss about the upcoming IPO, which is lined up for tomorrow. That is Rossari IPO. Okay, let's quickly go on to the key technical things. What are things we have on this IPO? So whether it is affordable and what would be the company's nature and what kind of business it is doing. All these things. Let us see all things in detail in upcoming videos. Like upcoming slides, we'll be going to see all the things in detail. So before I want to proceed, right, investments are subject to market risk. So kindly consult your financial advisor before investing. Yeah. About the company. Yeah. Rossari, right? Rossari is a specialty chemical based business company. Okay. So it is formed in the year 2003 and it has been formed by two people called Edward and Sunil. So this is the introduction about them, and it is formed in the year 2003, and it is in the name of Rossari Labtech initially. After that, in the year 2019, right, so they have changed the name as Rossari Biotech Limited. So they are the manufacturer, they are into the business of specialty chemicals. So that is their core business. What is specialty chemicals and what is chemical industry? Both has some difference. Chemical industry is something like you will be having the products, right, related to drugs. Everything is going to be created in chemical industry. Whereas specialty chemicals is something like specific to home care products, textile industry, and specific to animal care products and all other things. So it is going to be a USD 240 billion industry. So in that we have 50% things got present in Rossari and 50% things we don't have presence. That means it's a small company and it is growing up in a very different way. So now straightly let's go and check what are the business area that Rossari is very strong. So Rossari is currently very strong in all these business areas. That is personal home care and chemical performance chemicals, so soaps, detergents, all these things, and textile specialty chemicals and animal health nutrition. So all these three things are very major things for Rossari at this moment. Moving on with the specialty. So they are the largest textile specialty player in India since September 2019. So the company has around 1948 different products. That is 1948 products they have. So that means they have a wide presence. So they have around close to 2000 products. So that creates a wide presence. Actually, they operates two plants and they have a R&D session here in India. So they have a wide network of around 192 distributors here in India and 27 distributors who are spread across the world. It means that it has a wide presence of around close to 18 countries apart from India. The revenue for Rossari is mostly coming 80% from India, 20% from out of India. So that is one key point. How the Rossari's business is happening, strength of them. So they have a diversified profile. So as we saw, right, they are into three major industries and they are contributing major in the textile industry. So they attract clients like Arvind and all other textile-based clients. Apart from that, they have good clients in the sector of home products, home personal products, like HUL is their client, and they have something like Domino's Pizza is also their client, and Swiggy is also their client. We're going to see their partners detailing in coming things. Well known, they are into the textile industry part and they are working on it, and they have their own things here set up. So R&D and in-house plan. So they have the pan-India distribution network. That is one key advantage, which that they will not have any reliability on this particular zone or that particular zone. They have complete presence. Mainly the promoters of this company, right? They are only two people, Edward and Sunil. They are acting as the promoters as of now. It means that majority of the stake, 95% is the total stake, and majority close to 84% is being held by these two persons. And post listing, what is going to happen is this 95% is going to come down to 73%, means that the promoter is cutting their stocks. Issues of the objective, the net proceed of the fresh issues, mainly they're creating this issue for the repayment of certain indebtedness available by the company. So they're going to use almost 50% of their capital for repayment, I mean for their IPO amount to the repayment, and they're going to do the capital work requirement they're also going to use, and they're going to use for the general corporate purpose. So it means that they're going to use this capex fund and they're going to increase their presence or increase, they would go for increase in presence in some more other sectors of this chemical industry as well. And if they reduce the debt, what will happen is the company will reduce their cost on interest. So that is one major advantage. So that will boost up the profit of the company. Now financials. Financial wise, the assets are going good. So they have some decent assets. Revenue wise also they are doing good, but not comparatively that much good. They are good comparatively when we start from 2017 to still now. So the PAT is also rising steadily. So that are the ways in which they are moving up in the financials. So right now, dates of listing and all other things, right? So the price band here is 423 to 425. That means this is coming in the listing price of 425, and they will be having a lot size of 35. So minimum is one lot. So you'll be able to apply in the lot size of 35 in the multiples of 30. That means 35, 35, 35. It's like 35, 70, 105 in that way. And maximum is you can apply for 13 lots. That is, the retail individual will be given a limit of around close to 2 lakhs. So that is common for all the things. Important point to note here is the market cap and the PX, the PE. Okay, as of now, check the PE of them. So here, this plays an important role. We're going to compare these things with other peer players who are available in this sector. Actually, it is not a monoplay. We have so many listed players in this, and it is a diversified profile. So this Rosario is on 3 sectors. All other people who are part of this, right? So they're gonna work on other things as well, other sectors as well. So as of now, the PE is 33.8 and the market cap as of now is 2,200. Let's compare this with the peers. So these are the peers who are there in the industry as of now. So their market cap is subsequently higher than our Rossari. Reason being, they are coming very new to the market. And what comparatively we have to check here for the market cap is the PE ratio. So as long as the market cap is reduced, right, the PE should also be reduced. That will justify the valuations, right, recommended valuation. So it means that if the PE is higher and the market cap is also less, that means that the value of the company is slightly higher. I don't say it is higher, slightly higher. Okay, these things we need to check. Okay, comparatively, the PE of this company is 33 PE. So 33, that is one of the main important thing we have to look about it. So price band as of now is 425 rupees, and the PE is slightly higher, that is close to 33, and the market cap is also very less, right? Compared to this comparative market cap, the PE should ask to be reduced for Rosario, but it is slightly higher. That means that company is slightly overvalued. So that is what I have to say here. And moving on with the suggestion on how to go for this expiry or how to approach for this expiry. Okay, before I move, right, let's check who are the partners of Rossari. So moving on with the customers base. So they have a good customer presence. So HUL is their customer. Venky's a leading poultry farm, Venky's, and this guy Arvind is also their customer. So they have some decent customer presence. The only thing is top 5 customers, right? They are contributing around close to 50% of the revenue. So that means that if there is any problem in that client relationship or if there is any break, that would be a risky factor for the company to grow and get money. Okay. So the conclusion of this IPO is you can go ahead and apply for it, but don't look for the listing gains. So this company at this moment, right, coming to the IPO is a very big decision. Reason being, it is like something like a very different decision as of now. So the market scenarios and all other things. Right now, the amount which we are expecting of 425 is slightly higher. That is overvalued for this since the PE of the stock is higher compared to the market cap. So we can aim to get this on a very low price as well. So it's like we're going to get this in a dead cheap price after listing also. That is also possible. But going forward, right, in the next 1 year to 2 years, this is going to rock and it will short cross 550 plus levels. So as a whole, do not apply this for a listing gain, but as a long time investor, you can able to go ahead and look it and you can able to book for it. Who want to take it as a value investing, right? They can wait for the listing and look after that for buying. So it's like you can wait for the price to get dipped since the P of the company is slightly higher. Thanks friends. Thanks for watching this video. Stay tuned and we'll be coming up with yet another video shortly.